Good morning, ARMR Insiders, and welcome to the morning meeting of the ARMR Virtual Hedge Fund Experience. Thanks for joining me. We're going to go over big picture, macro. We're going to talk about Risk Monitor Green, what happened yesterday, and then highlight a couple of stocks and their behavior, and really what it means for this moment in time for the cycle that we're on. Right, we're Risk Monitor Green. How do we want to take our risk? Where do we want to take our risk? So I'm going to get into all of that. Don't forget, you're a portfolio manager joining me for the morning meeting. I hope you have your coffee and a bagel. And when you come out of this meeting, you need to take the information and make it your own. Be the smart money. Figure out your risk tolerance, your goal, and then just keep executing that strategy. Okay. So diving in, I spent the last couple days ranting about the fact that the market doesn't have to go down. So, of course, yesterday the market went down. That's classic. But let's put yesterday's action in context. So what I said the last couple of days is the market could always go down, but it doesn't have to go down. Everyone's calling for a pullback. It has to pull back. It doesn't have to. I've seen many times where the market just melts up against everybody's belief. It doesn't mean there won't be a sell-off here or there, but overall, the market just goes higher. Okay. So then what happened yesterday? And I actually said this to you yesterday morning during the morning meeting. Like, I'm having this conversation with you, so the market's probably going to get hit, right? But what happened yesterday is another reaction to the bond market auction. And I want to call your attention to this. We've been talking about it the last few weeks. The bond market, there are going to be a series of negative auctions. Negative. What I mean by that is auctions that come in weaker than expected. The demand for papers weaker than expected. It's the reaction to that news and not the news itself that matters. And this is the key takeaway from yesterday right now. Could change by the end of the day. But as I sit here right now, talking to you, let's break down what happened yesterday. There was a 3-hour sell-off. We've had Risk Monitor Green. The market's been on fire. There was an auction result. Equities sold off for 3 hours. Debt sold off for 9 minutes. I'm going to say that again. Equities sold off for 3 hours. Debt sold off for 9 minutes. When the risk monitor was red and we got negative auctions, I shouldn't say negative, we got weaker than expected auctions that crushed the market. Treasuries were getting creamed all day. The news would come out and they'd rip it down to the close. And so I want to draw your attention back to what's going on. The risk monitor's green. At any given time, there'll be shakeouts along the way to test the rally. The weekly close is more important than any one day or any 3-hour segment. And so I want to draw your attention to the weekly bar chart of the S&P. Let's take a look, and you'll get the goalposts of what I'm really thinking about when it comes to the behavior of the market and the risk monitor green signal. Okay. This is the S&P. This is like what looks to me like a nice cup and handle, but who knows? I want to drill down and into. I want to go right here. Okay, and show you this. Okay, this was the risk monitor green week, huge up week. Why don't we highlight the whole thing in green? Whoops. Why does it do that? All right, that doesn't make any sense, but let's go like this. All right, let's try this again. All right, this whole week is the risk monitor green week. And we'll make it dark green. All right. Now, what I want to share with you, what I'll be looking at today. Okay. What I'm looking at today is where does this week end up? And I submit to you, this is the weekly, this week right here is this tiny little red movement versus a huge up week last week. And what I submit to you is that if we end the week this week in the top quarter of the range of last week, totally reasonable pause after the risk monitor green signal. Nothing will have changed. It'd be great. If we close today in the bottom half of last week's range, we got a problem. Chances are I'll have raised a lot of cash by the close. So that's your goalpost going into today. Close up here. If the market's up at all today, risk monitor green looks great. Carrying my exposure to the NASDAQ and the S&P. Haven't changed it. Might even bump it up a little bit. What we do learn from this week, we're going to get into in a minute, is the importance at this stage in the risk monitor green signal to focus on the leadership. That's where the reward to risk is right. I've been saying to you, now is not the time to build out a portfolio of a whole bunch of individual stocks. Too dangerous. Don't believe me? Go look at Trade Desk. One of my favorite ideas, been on my whiteboard for a long time. We don't own it. I don't own it. In fact, I said to you, there's no way I'm going to hold this thing into earnings, but I want to watch it, see how it trades after earnings. Okay, so this is the stock before earnings, right? And now after earnings, it's going to gap down huge, down like 23, 24%. It was down like 30% in the aftermarket last night. They beat the number, top line, bottom line, and guided Q4 a lot lower than expected. That's a cautionary tale. The reason we're not losing money in that trade is because we're not loading up on a whole bunch of individual stocks into earnings announcements. It's not worth it. Some of them gap up. I mean, let's say Roadblocks gapped up. This one's getting crushed. It's not worth it. It's not the right market for that. In 2020, what do you say to me? What's the right market to buy a bunch of individual stocks? Well, the Fed's adding liquidity and the market's melting up. Go ahead and buy all the individual stocks you want. And one after another, they'd have earnings announcements and they'd gap up 30%. That's the time to be aggressive on individual names and grab massive alpha. When we did it together in 2020. Now's not the time. The risk we want to take now is market risk. If we want to outperform the market, SSO, QLD, SPXL, QQQQ, right? Take double and triple the market exposure. That's the risk I'm willing to take at this stage. I'll outperform the market, but I'll have no individual stock risk. I don't want the market to go up and for me to have a portfolio that blows up because the research, look, we all do the best we can in research, but you don't know what the reaction is going to be to earnings. Trade Desk had a great quarter. Management decided to lower expectations in Q4. Bang, the stock's down huge. That's not the kind of risk I want to take at this stage. All right, so getting back to the market. Just to wrap up, if we close in the top quarter of the range from last week, that's a wonderful second week of risk monitor green. And we'll get out of the first 5 days intact, which suggests that the market will be going higher following ARMR probability metrics. Okay. So that's the big picture on the market. And that's your marching orders, I guess, on the way out today. Watch how it trades. Top quarter, great. Nothing's wrong. Keep doing what we're doing, right? Bottom half, something is wrong. Probably have to raise a lot of cash. Okay. And you can check in with me. 11:30, we do an update. 3:30, we do an update. So if you can't be on the desk all day, but you want to come into the live stream and see what's going on, 11:30 update, 3:30 update. Okay. And you can always come in let's say 12:30 is when you can make it, just ask me. Direct message me if you want to say, hey, what's happening? What did I miss? Happy to do an update whenever it works for you. Okay. So, I wanted to share with you and drill down. I wanted to drill down with you on the Treasury story, because this is really the key. Treasuries are up 1% right now. And so I wanted to show you this chart. Okay. It all comes down to bonds. Let's explain the market right now. What's happening? If rates have peaked, so when this chart pattern's price goes up, it means rates are going down. Price goes up, rates are going down. Okay. If TLT, 20 plus year US Treasury bonds, have broken the downtrend, they have, and they've begun an uptrend, we don't know. But if that happens, it's bullish for the stock market and primarily bullish for the NASDAQ 100 and the Magnificent Seven. Those are the stocks that do the best when TLT's rallying and rates are coming down. Small caps and other names, they come out. They come later. Okay. So we got to focus on the NASDAQ 100 and the S&P 500 weighted indexes. I took a shot on small caps this week, lost some money. I took a shot on the ARK funds, lost a little bit of money. It's too early. It's just a little too early. If we get a follow-on buy signal in the next couple of weeks, so we got the risk monitor green, then it starts to grind higher, pullbacks, whatnot, and grinds higher, and we get a follow-on entry point, that will be the time to add, broaden out our exposure a bit. First thing I'll do is add ARK and my innovative stocks. But I'll get to that later. Let's talk about treasuries right now. This is the proverbial canary in the coal mine. This is the leader of the rally that's unfolding. So when equities sold off for 3 hours after this big sell-off in treasuries, what I want you to see here is that treasuries bottomed in 9 minutes. Equities kept going down. Treasuries bottomed in 9 minutes and rallied the rest of the day. Now treasuries are up about 1% on the morning, trading around 88.29, somewhere up here. So treasuries are opening above, at or above the high of the bar yesterday that caused the selling. We had a treasury auction. Auctions are going to be bad. We talked about that. Treasuries cratered for three bars, 9 minutes. Equities, 3 hours. Now treasuries are going to open above the high of the auction announcement. All we have to do is watch treasuries. The knee-jerk reaction is algo driven and all that kind of stuff. But over the next 24, 48 hours, whatever, you continue to see an uptrend in treasuries. That's all you need to know. I would suspect that if treasuries can gap up and hold the gap and grind higher, equity is going to be just fine. Okay? So keep your eye on that. Now you know what to watch today. You're watching the S&P to see where we close versus last week's weekly bar. Top quarter of the range, great. Bottom half, got a problem. The second thing you want to follow is treasuries. If treasuries can gap up and hold the gap and grind higher, yesterday's reaction is a knee-jerk reaction in an up market. That's it. Okay? Let's go over let's say ARK for a second. AR. Okay. I want to own. So what stocks would I own? Okay. Stocks that are top of my list, right? Top shelf stocks, whatever. Stocks to buy, whatever you want to call it, right? Stocks to watch. If we get a follow-on signal, not today, I'm going to leave these alone today, but next week, let's say the market holds up, has a decent close Friday, Next week, we start to get follow through. I'm going to go to ARK. I'm going to go to innovation. I'm going to go to crypto. Now, we booked a profit in the crypto stocks yesterday. Okay, but here's ARK. I put on a position, took it off yesterday, said I'm going to just wait. It has to break out above the top of that pattern, and instead it sold off, so I took it off. Okay, but then we made money. Okay, in MicroStrategy and Coinbase. And I just want to show you these two charts. I have to trade these aggressively. That's just the way it is. I don't want to own individual stocks. I've already told you that. So I'm taking my shots here or there on a couple of individual names. And when they put in classic hammer tops or doji stones using candlestick charting analysis, it tells us that risks are dramatically elevated. Doesn't mean they can't skyrocket again. They may. I don't know what Bitcoin's going to do, but I can't worry about that. I got to execute a strategy. So when I'm on a position that's going up, gaps up, and closes at the bottom of that range, make it a perfect doji stone or a hammer top, I book my profits. Doesn't mean I don't want to own them. I still think crypto looks really good. I think Bitcoin looks really good. Bitcoin's up a little bit this morning, like 1%. These stocks are up a couple percent. What I'll be doing with these stocks now is watching how they behave after these doji stones, okay? After these hammers. They might consolidate just like they did here on MicroStrategy. It gapped up, took off. We sold it here. This was the other day, okay? We've traded it twice. We've made money twice, okay? So this was the same type of bar. It gapped up, went up. It gave me like a kind of like a, I don't know what exactly you'd call that, but it's an ugly bar. And I booked a profit, sold off for a couple days, created a pennant formation, and we bought it back right here. Okay. We bought it back right there, took off again, set up another reversal, booked a profit. Let's see how it trades. If it sets up a pennant, I can't wait to buy it back. Same holds true for Coinbase. All right. So I'm working on my lists of stocks that I want to own. ARK will be the type of name I want to own. You know, MicroStrategy and Coinbase at the top of my list. I want to get them back in the portfolio. We still own Uber. I'm still long Palantir. Those two positions I haven't removed. MDB from yesterday, I still have an interest in that. It looks really good to me. I'm looking at Braze. I don't want to own anything in front of earnings, but if they get past earnings and the stocks are doing well, I'm going to look to put them in the portfolio. Okay. IoT, it's just not time for them yet. Okay. So for right now, the focus is SSO, QLD. If these things hold in here, they pull back, they hold, and they give me a follow-on signal. Right now, I'm 50 to 100% long the market. If we get a follow-on signal here, the accounts that are 50 probably go to 75. And the accounts that are 100% probably go to 150. I'm going to focus on the leadership. Make my money there, earn the right to take risk over the next few weeks in other areas is the ARMR investing strategy. I hope you all found this helpful. I look forward to working with you on the live desk. We've only had one day this week where our ARMR carry trade has been active, and we had a really nice day. That was Tuesday. The last 3 days, the other 3 days of the week, just been kind of waiting. Nothing really happening. Tiny little trades, break even, just sitting and waiting. That's called smart trading. We're not day trading. We don't have to put a trade on. I'm collecting 5.5% yield there, right? But if we get the setup today, bang, I can't wait to put some capital to work, see if we can't have a really strong week there. All right. So number one, trading SPXL, TQQQ. And if we get buy triggers there, then I might do something in SSO, QLD. I don't know. I might bump up those positions into the end of the week if it's strong. On the flip side, if things are going lower, and we're in the bottom half of the range of last week, I might be 100% cash. So stay tuned. Meet me on the desk. I'll see you at 9:30, guys. Have a great day trading.